Um, so as you guys know, my name is Wilcher Joseph. It's everything here is for educational purposes, so definitely do your due diligence. So today I wanted to talk about the recession, crash coming potentially, and what else did I want? And also trading process and improvement. So I left my information for people interested in one-on-ones. I'm also gonna leave my coffee link there, like some more stuff. But I want to start talking. Like anybody see what's been going on lately in the market? Anybody got a comment?
I just feel like it's going down.
It went down. It hit a new low today.
Mm-hmm.
Yeah, it went up to 405, and like I don't know if you've been following SPY, but
it's going to be a recession.
Yeah, it's kind of scary. Yeah, it's kind of scary, I think.
Well, you know, I'm not worried if it goes down. It's more a matter of if it will be able to recover after it comes back up. You know what I'm saying?
Well, it will recover. It will eventually recover.
Right. So, and then, you know, then it becomes an opportunity, doesn't it?
It does. It most absolutely is. At the end of the day, there's no such thing as bad markets, only bad entries.
Right. So the question isn't, you know, how bad is it? The question is, how are we going to play it?
So that's what we're going to talk about today. That's exactly what I'm talking about. So let's look at a couple things. Let's start with the heat map. So so I'm on FinViz, and so if you just go on FinViz, it looks like this, right? And then right here, there's a little heat map. You click on it. The heat map is just a quick way to view the sectors in like a visual representation. And what's cool about it is that every company, its size is represented is a representation of its market cap. So the bigger the square, the bigger the company. So just by looking, guys, what's the biggest company in the whole stock market?
Apple, Google, and Microsoft, Amazon.
Yep. So, and then you can see that they barely close green. Like Amazon barely closed green. Apple barely closed green. You know, that's why they're like kind of grayed out. But the real green ones are like, you know, the green, and you see they close a higher percentage versus the red. But no kidding, at one point during the day, every single square was red. Like just about like at one point during the day, every single square was red. And that was crazy to see, you know. And the thing about it is like, let me show you guys some stuff real quick. So there we go. Let me share my screen. So back on this. All right, so yeah, so they've been saying it's a rough 4-month stock. So since the market opened, it's been a bear market in a sense, right? Because at one point we were down, I think 12-15%, but right now we're down 10% year to date, and this is the worst start of the year since 1939. So this is like a, I don't know, once in a lifetime event. Like this is the worst start of the stock market in 84 years. That's one, right? Yeah, that's one. Then you gotta look at the federal funds rate. So like really, all right. So it's about the FOMC. So this website right here, cmegroup.com, it tracks the 30-year Fed fund futures market. So basically, this is the most important interest rate. This is the interest. So the FOMC is the Federal Open Market Committee, and they set the interest rates on the future, right? And the federal funds rate is the most important interest rate because that's the interest rates that the banks borrow from, you know? So the FOMC, they're the federal bankers, and this is them guessing the rate hike. So the expected rate hike is 50 basis points. So basically 0.5%. But as you can see right here, most people are expecting a triple rate hike. Some people are expecting a quadruple rate hike. And this is all going down on my birthday, May 4th. That's when
Happy
Powell,
birthday.
yeah. Yeah, so this is my only class this week. I'm gonna be in Mexico on Friday through next week. So I won't have
Wow.
class next week either, but I'll be back the following. So that's why I wanted to make this class like just special and
Oh,
talk
thank
about
you.
direct. Yeah, no problem, guys. So
Where you going? Cancun? Happy Earth Day, man.
Cancun, yeah, it's my first time there. I didn't go there in college, so I'll see what the hype is all about.
Oh, you're gonna love it. It's nice.
Yeah. So, you gotta enjoy your profits too. We can't just trade and pay bills and stuff. We gotta.
Well, that's the question. Are you gonna be able to? Are you gonna
Thank
be able
you.
to stay
Thank
away
you,
from?
Lakeisha. Yeah.
Are you gonna look at the market while you're gone?
Yeah, a little bit, light trading, in and out, 5 minutes, 10 minutes. Like today, I was really quick in and out. If I just keep scalping, because especially in this market, if you think like a scalper, it's the safest way to think because you're thinking quickly in and out. And maybe it'll become a trend trade, maybe, but a trend trade will never become a scalp. You can't just think trend trade, get caught up in these trades that only last 10 minutes in your direction. So you got to be able to execute and take advantage of every opportunity that the market gives you. So that's what it's all about. So the Fed rate, but the crazy thing why this is looking really bad for the market and it's showing signs of early recession is the GDP. So the GDP is the gross domestic product. That's showing like the growth of the economy itself, right? And they expected it to be up 1.1%, but it was actually down. It's actually down 1.4%. So we had a bad quarter, right? But if we have two back-to-back negative GDP growth, that equals a recession. You guys follow me?
Yep.
So,
Yes.
so if next quarter is as bad as this one, it's definitely going to be a recession. So if the market's going to crash, I think it is, but when is the question, and nobody can know the time, but there's at least a couple things right now that could actually accelerate it. And it's about like just being ready to play both sides. There's no loyalty. You got to be ready to play both sides because what may happen too is that the markets might grow. But here's an interesting chart on that. Where is that? I think it was on this one. Hold on. This one. Yeah, you guys see my chart. I mean, my screen. Where was it? Oh yeah, the PowerPoint. Yeah, so look at this right here. You guys see the chart right here? Anybody see my screen?
Yeah.
Yeah.
So this is a chart showing the performance of the interest rate of the markets when they raise the interest rate 50 basis points or more. All right. So as you can see, we have the Dow Jones, the S&P, the NASDAQ, and the Russell. And you can see like the first months, it would be negative. So this is like after the rate hike. This is during the rate hike, and then continuously after the rate hike, So, but you see that by the 6th month, things tend to turn around. So as far as the plan of when to hop back in, the 6-month period is a good benchmark based off of the past history, right?
Yeah, so it always recovers, in other words.
Yeah, so 6 months after things hit the fan, we should be buying. I might be buying a little bit before that, but we should be buying at that point. Because my plan is to buy a bunch of stocks after the market crash, make money on the way down, and use that money to just buy everything up. So that's the plan. But at the same time, it's gonna go up and down in between time, because it might be an initial first reaction. Like you see in the market today, the market went so low today, you didn't think it would come back and finish green, So you got to be ready to play both sides in this market, and you got to be quick and flexible because it's not really picking a clear side. Not quite yet, almost, but not quite. So that's what's happening with that. What else did I want to show you guys? Of the market itself. So here's SPY. Yeah, so you see at one point, and let me take off some of these indicators just to keep it simple, right? So as you can see, this is the daily chart. SPY, it opened. Look, think about how, first of all, this is crazy. SPY opened where it closed yesterday. Does SPY ever do that? Like, not really. You know what I mean? Like, if you look at this chart, it opened right where it closed. So that's one. That means it held the low, right? So then it did pop up. It did make a high at one point, but you see that before that it actually made a low of 405, which is breaking the old low at 409. This was the day of the invasion. We broke that low. Even though we didn't hold it, we still broke it. So that shows a lot of fear, you know, and a lot of people are gonna take that into consideration, you know. Because the thing about the market is that everybody knows this information, you know what I mean? But it's all about like what you can do with it, you know. So what I want to show you guys again. Federal funds. Oh yeah, so back to the federal funds rate real quick. There's something else I wanted to do. Let's go back to the rate. All right, so the federal funds rate. Back to the slide. Give me a second, guys. I think it was on this one, but it was this one. So yeah, so does anybody understand like basis points and why they do that?
Do what?
They talk in basis points. They say the interest rate is going to increase by 50 basis points, 75 basis points, 25 basis points. Do you guys know why they use basis points? Because it's talking about the interest rate. Because it will be confusing. So like let's say like if the interest rate is 5%, right? If the interest rate is 5% and you're like, oh, the interest rate went up by 1%, you're gonna think that it went from 5 to 6%, right? But no, 1% of 5%. Does that make sense?
Yeah. How many
So it's
basis
really-
points is that?
So 0.5%.
And how many basis points is 1% of 5%?
That's it.
That's 50
0.5%. Oh, 50. I'm sorry.
50, yeah, 50
Yeah,
basis
50.
points. 50 basis points. So what is a basis point? A point of 5%?
Yeah, interest rate increase, rate hike.
Yeah, so 1 basis point is 0.05%.
Yes. 0.05%. That's
Okay.
why but this way you won't get confused by them saying 1% increase, 2% increase, because it's of the total. Make sense?
Yeah. Yeah, it's a
I
different.
just wanted to clear that up because some people probably didn't know this.
No.
Yeah. So a lot of people think it's really gonna be 75. So a triple. Because originally it was supposed to be 0.25. You know what I mean? It was supposed to be 25. Originally, it was supposed to be 25 basis points. Originally, right?
Right.
Then they said 50, right? So now the market's expecting 50, but Brainerd and some of the other ones talked about 75. And like, it doesn't make sense when Powell's saying one thing, Brainerd saying another thing, and you got Bullock. Like, you guys should also learn the members of the Federal Reserve, because they control our money, our monetary policies, and everything. So it does make sense to learn about these people. And like they trade the futures that control where the interest rate going. And where the interest rate goes, our economy will go too.
Right.
So go back to SPY.
When you Winchell,
Yeah.
I clocked in a little bit late, but you said when the interest rate goes, when it goes up, our economy is going to go down, it's going to crash.
like not necessarily. It all depends on the speed and it all depends on the timing. But it's so delicate that like most of the time when it's a depression and inflation is high and the Fed has to fix it and get our economy back on track, they have about a 10% win rate of actually succeeding. So that's something to consider. You understand what I'm saying?
Yep, I sure do.
It's not looking good. Not to say that it can't be different or it can't still happen, because we can't predict what's going to happen in the future. But if we're ready to react and we know and we can think of all the scenarios, then we have a plan to just, to take an action. What do I want to show you guys? SPY and what about SPY? Let's go to trading view. Yeah, I wanted to go intraday so you can see like when things turned around. So we go to the by the way, some of these indicators I use they help me for entries, but if there's one that I would have you guys focus on, it would be this one. And like this is a good indicator to basically go long and short when price closes above it or below it.
We're not looking at your screen.
Oh, you're not? Okay, thanks. All right here. So so this yellow line right here is the 9-day moving period. It's a moving average. So average is the last 9 bars, and since we're on the daily, it's a 9-day moving average. We were on the 15-minute, it would just be the last 9 15-minute bars that it averages, right? But this is a good strength indicator, momentum indicator, because what you want to do is you want to look for the buy when it closes above this, and then you want to sell it by the time it hits the line or goes underneath it. So like, for example, this would have been a losing trade right here, right? If you entered right when it closes at any point, well, unless you like got in a little early because this is a daily. So, but like, let's say you waited to the end of the day, you got in, next day, you would have to sell it right then and there. Otherwise, if you held it, it would have came down, and the next day it would have came down. But the point being is that once you get to around this line again, that's also your indicator to sell. So it's a buy and a sell indicator in itself. And then you get certain points where you buy above this line and it keeps going until it comes back down. And this is again your signal to sell. So now it's the same thing opposite. If it closes under this line, you want to sell it, and then you can basically ride it down until it comes back to the line or crosses it to sell. So like basically if I was in a put like up from this day, from the 21st, and I could have held this, right? And I wouldn't have a signal to sell it off until it crosses the yellow line. Does that make sense to you guys? Very, very easy strategy. It's very easy. Yeah, very easy, but effective.
Buy above the, and this is the SMA.
Yep, simple moving average is a 9 period. So since we're on the daily 9-day.
Okay, let me just break it down the way I can understand it. Buy when it's above the yellow line.
Yeah, when the candle closes above. So this is the daily, right? So if I was trading this, I wouldn't look at the daily. I would look at something like either the hour, right, or the 15-minute. But let's just say I'm gonna hold it for a while and I'm gonna look at the hour. So basically, as soon as the candle closes above this, that's my signal to buy. Once it closes under this, that's my signal to sell. Make sense?
Which one would you recommend for the daily chart?
So the thing is, you look at if you're looking at the daily chart, you're gonna be holding this for a couple of days. So if I'm looking at the daily chart, I'll probably buy a monthly contract, right? Monthly or 3 weeks or 2 weeks. I'm gonna hold it for a couple of days, right? So you look at your daily for direction on the day, right? But let's say in the moment for you to enter, you got to look at where is price on the day, so you know what section of the day you're getting in, so you're not getting it at the wrong time on the day. Make sense?
Yeah, that makes sense.
Yeah. So like for example, you see this day, right? It was green, but like if you go in intraday on the hour, you're gonna see how the day played. 8:30, you see the price went down, 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 but somehow it came up here to close. You know, so on my fault. 8:30 is right here. Sorry, 8:30 right here. But look, 8:30 is right here. So you see, the price came up. The second hour came down. No, that's the second hour. Then the third hour, it did a little pause. Fourth hour came down. Fifth hour came down, and it's not until the sixth hour that it started coming up to finish off the day. You know, just going off the hour. I can even bring it down to 15 minutes where you can really look more detail of what happened today. Where's 8:30? Right here. 8:30.
Can you address why there was that big spike in volume at the end of the day? Was there some kind of catalyst that
What did they
created that
say?
buying opportunity at the end of the day?
I'm trying to remember what they said happened. I did hear something. Let me look it up with you guys real quick.
Because it looked like something changed that made everyone start jumping back in at the last minute.
Yeah, it was. Let's see, Catalyst, SPY, S&P, end of day rally, end of day rallies, best day, blah blah blah. Positive earnings, maybe. 3-day losing streak, Nasdaq. Delta Airlines, better than expected quarterly results. So there was some good earnings. Who else had big? Who else had earnings today? Because earnings would affect the market right now. Who else? Who had earnings today? Today's Monday. I don't know who had earnings today. Google.
Because that
Earnings.
suggests that tomorrow morning it might open up also.
It may be green tomorrow. I could see that. I'm just gonna wait and see. Earnings calendar. No, I need today, Monday. But this is Monday. Where's the big names? Hold on. The image.
I guess Winchell, I'm sorry.
Winchell.
Winchell.
Yeah.
We could look at that strategy you taught us with, for looking at the last candle of the day, marking the high and low of that.
Yeah.
Whether it breaks the high or breaks the low.
Yeah, absolutely.
And retraces back to that point, back to support or back to the halfway mark. Okay.
Yeah, I'll go back to the chart. I'm just trying to see who had earnings today. 20. Why is it showing the past? This is the companies that had earnings, but I'm trying to look at the big names that had earnings. I don't know some of these companies, but I think it did say Delta. Like, so basically earnings is what happened today to help rally the market. So that's that. So let me go back to the SPY. So yeah, so you can look at SPY. So this is the 50. You guys still see my screen, right?
Yes.
Yeah, we can see it.
Right. So literally on the daily, I would just mark the highs and the lows. Here's the high. Here's the low. Definitely. I don't honestly, if it breaks this low, I'm already bearish. But definitely once it breaks this low, I'm bearish. Because I would play this low until that low as a target. I'll play from here to here. But this is the way you're supposed to do it, is the low itself. So what I'll do, I'll make another line. I'll just make a ray. I'll just use a horizontal ray. And I'll play the break of this right here. If it breaks that, I'm gonna go in, because at the end of the day, it closed inside, right? So if it breaks that, it's already bearish to me. But if you want to be extra safe, you can play it after it breaks 405. I'm just a little bit riskier. You guys get it?
Yeah, I think so.
Yeah, 411 is the break I'm looking for. if you want to be safer, you can wait for 409 because 409 is really low, and there's only one other time that it had done that this year, so that could be another entry. But these are the entries I'm looking. But now if it breaks this, now I'm looking for calls at least up to 423. So I'm using the previous candle body as my target, and this is basically the strat, guys. That's what I'm doing. This is the strat in a nutshell. Usually what you want to go to the 4 hour, especially if you're trying to play like you're trying to play it quick, and then you can use this right here. So that gives me even a clearer target. If I want to be safer, I can even come right here. You know, but on the 4 hour is a good, is because the thing about the 4 hour. So remember, daily is one candle, but like if you look at the 4 hour, it breaks up the day into 2 candles, sometimes 3, but it basically breaks it up into 2 candles. Because look, this is the 8:30 to 12:30, and this is 12:30 to 4. So you see how the day is broken up into 2 candles, like the trading day itself, like not the 24 hours of the whole day, but just the trading hours, they get broken up. So if you want to make your move and use this, it's more effective to do it on the 4 hour, because then you get closer and more precise entries. And you can see this was a previous support where it is right now. So that's why I say if it breaks it, I can play it back. But now, if I'm playing it, I'm looking at this right here, at this 9M, it isn't going to close above it. Because if it starts closing above it, it's showing me signs of some reversal. Now, reversal until how far? This is the first level I got to look at, and then this level, and then, you know. So this is basically how I trade, guys. It's just looking at the context of what the market is, because the market always tells me. Even today, like when I lost, I lost a trade, my first trade today, and the market was telling me, oh yeah, that's what I want to show you guys, the process, the journal. The market was telling me that I should have gotten out. I had my stop loss, but I had a trailing stop, but I kind of messed up how I did it. I still need to work on executing it the right way, and I lost more than I wanted to lose, but it wasn't bad though. Like I won the following trade, so that got me green for the day. But the fact that I had a stop loss stopped me from losing a lot. Yeah, I want to show you guys my journal. So let's see. All right. I'll pull it up on here. Yeah, so if you guys want to get better at trading, you have to become a better person, because it's really you that does all these decisions that lead to your success or your demise. Trader Sync. Yeah, so this is the website. I've been doing free trials on them, like, because I have a physical journal, but I still like using both of them. So here's my journal. So what I did, right? I only added my trades for 1 week. So this is just me 1 week of trading, my last week of trading, right? So you can see, you guys see my screen?
Yes.
All right, so you can see for this 7-day period, right? So you can see the main thing is going in and taking profit. Like I got in at 13, when to 14, I took it. Just seeing profit and taking it. And then when I lost, it hit my stop loss. Got in at 16, so that 13, lost. Got in at 70, so that 60, lost. But me doing this is saving me, because eventually, look, I eventually won. But then this day, I remember this day, it was a 0 day, and I was winning, and I got too cocky in myself, right? And I ended up losing $100 because I don't even think I think I kept moving my stop loss, so it just was not good. It was not good. But at the end of the day, you don't know which trade you're gonna win. You don't know which trade you're gonna lose. So like today, this is a trade that I won, but as you can see, like, it's just, since I've been keeping track of what I'm doing, like I can see, like, okay, right now for the week, I'm averaging $14 on my return. I got a 58% win rate. It should be, I could easily bring that up over 60, and then like I can see, like, I made $198 for the week. for these 7 days. You know what I mean? So if you want to be serious about your trading, you really need to keep track of it to this level where you know what you're doing and you can see the results. Anybody have any questions on this website? Nobody have any questions?
Is that a subscribe website that you subscribe to?
Yeah, it's like it has a fee. But I just keep doing the free trials. But
Oh, yeah, you said that. That's right. I remember you said that before. Okay.
yeah, tradersync.com. Trader. Yeah, so this is it. Try 7 days for free. The pricing on it is monthly is $30 a month. But I also have this, so that's why I don't pay for it.
Oh,
Yeah, I just use it like every so often,
mm-hmm.
you know.
So you keep cumulative trades, or you have to go back and start fresh every time you get a free trial?
So basically the way it works is like you're able to import. So if you go on Thinkorswim and you go to your accounts and statements, it has a record of all your transactions. So you can import that as a file and then just import it to there and auto populate it. Yeah.
Sure.
So you can pick how many days too. So
Nice.
yeah, it's pretty cool. And it's like
If you have more than one account in different places, it's not going to work, right?
you can have because you can import it. I think you just probably have to delete and re-import it. I don't know if you can import multiple because you can pick your broker. You can import from Robinhood. You can import from any broker that's on this list. So you can, but to do all that at the same time, you might have to separate it somehow.
Yeah. Okay.
Yeah, but you can do it one by one if anything.
Mm-hmm.
But I like it. And like since I've been doing it, let me tell you guys, like last year, my win rate was like 23%. You guys see my win rate now. So doing this has been the answer. Doing this, keeping track, really writing down my pitfalls, my mistakes, so I don't keep making the same mistakes. Because guess what? We keep making the same mistakes trading, but we aren't really aware that we keep making them, you know?
Would you mind sharing? What pitfall you kept falling into that you were able to correct and see?
Yeah, hold on. I'll bring my actual journal book and share one with you guys. So, okay, so the trade I lost today, right? UVXY, right? UVXY. So, all right, so look, you guys can see what happened, right? You guys can see how I lost this trade because at one point it was just this green candle before this red candle happened, right? So let me go to the 1 hour. All right, so yeah, so basically my strategy, right? My strategy is once it breaks out, pause a little bit. Once it takes out the opposite candle, that's when I get in there. But with every strategy, you don't win every time. So literally, it looked like this. And I thought what I thought, you know. But one thing is that I entered prematurely, like, because I use these a lot. So I use these EMA clouds a lot. They help me out a lot as far as direction and strength. So what happened was, I think even on the 15-minute, the safest entry for me is to get in near the line. But I got in like away from the line. So when it's away from the line, it's overextended.
Yeah.
Does that make sense? So I got in like something like this, you know what I mean? The worst time to get in, you know what I mean? Just because it broke out, it broke out, and it did. And look, the volume was increasing a little bit, so everything kind of looked good for me. But then this happened.
Well, because earnings came out at the end of the day.
And the earnings came out, and then boom, we're like, yeah, you thought. I was like, oh, thank God I got a stop loss. And that's what happened. So what did I learn? Wait till I'm close to that line. Don't get in if I'm far away from this line. always wait to get in near the line. That way I can quickly adjust, you know? Because if I'm getting in, like, let's say if I got in like right here and then quickly started going to the line, I could just sell off as soon as we break this low, I could just got out. But the fact that I'm getting in right here, now it's like I don't have a safe place to put my stop loss.
Mhm.
You know, because I was playing the breakout. So that was like a good lesson right there. So that's it for today, guys. So see you guys later. Here's
Have
my
a great trip.
links.
Happy birthday. Enjoy your
Thank
trip.
you.
Thank you.
Thank you.
Thank
Have a good day.
you.
All right, bye everybody. See
Bye.
you
Bye-bye.
guys in like 2 weeks.